Hey there, everybody. Thank you for joining us today. We have a great session for you on how AI is affecting the fintech industry. I'm going to bring Hall up, our CEO, to get things started. But just a reminder that if you have any questions, go ahead and put those in our chat box during the session, and we'll do our best to get to them if we have time. And please be sure to answer the poll at the end of our session today so we can follow up with you. Hall, why don't you take it away?
Great. Thanks, Shane. I want to thank everybody for joining us today. We have a great presenter here from the Artemis Fund. Diana Murakhovskaya is the co-founder and general partner of the Artemis Fund. She's going to talk about how AI is affecting the fintech industry. Looking forward to that. And then after that, we'll have a presentation from Chris Casper of Techless as well. And for those who are interested in learning how 10 Capital works, we'll do that as well to give you an overview of our program and how it works. So with that, let's bring up Diana. Diana, thanks for joining us today. Can you tell us a little bit more about yourself and your fund, and then kick into your presentation?
Yeah, thanks so much for having me. So as you perfectly pronounced, my name is Diana Murakhovskaya. I'm one of the 3 founders and GPs of the Artemis Fund. We're based mostly in Texas. I'm in Houston, and then we've got our associate here in Austin. We lead seed rounds for female founders and co-founders modernizing wealth through fintech, commerce enablement, and care tech. I'll give you a little bit more background about myself and kind of how we really came to be, and then we can dive into the AI space and how we're thinking about it from a fintech perspective. So I was born in Ukraine, raised in New York, studied mechanical engineering. Spent about 10 years on Wall Street working in tech banking and commodity sales and trading, and then spent the next 10 years in the startup space, the last 5 of which were with the Artemis Fund. When I moved to Houston in 2016, one of the things missing for me were diverse networks for investing, for finding founders, and that's how I met my 2 partners, Stephanie Campbell and Leslie Goldman here, and we started the fund. Artemis is named after the goddess of the hunt and protector of women. And at Artemis, we're really committed to advancing society by investing in overlooked and underdeveloped resources of female founders. A lot of these themes, not only that we invest in elevate women, but empower more people in society to create wealth and control their own destinies. We systematically evaluate and think about the bottom line of our portfolio companies, their customers, and the performance of our fund. And so the way we do that is by investing in 3 core themes. The first really big area for us, and that's about where half of our investments, if not more, lie, is fintech. We really believe that fintech has the power to narrow the wealth gap drastically. And Artemis invests in fintech platforms and infrastructure that create a more accessible, affordable, and frictionless financial system. The world has created over 43 trillion in new wealth since 2020, but 63% of that goes to the top 1%. And so today's financial system allows us to make payments and money and access credit more efficiently. And through tech, we can make that service available to those who've not historically had it. People who live outside the financial system spend much more, even up to 10% of their disposable income, on unnecessary fees and interest rates. So we believe that economic mobility should not be limited to your gender, your race, or your background. That's why even in tandem with commercial success, our companies are making tremendous economic impact to the bottom line of their customers and their communities. Women and female founders have really begin to start rising the ranks of traditional finance service firms and fintechs. And we really think they're going to make the next great fintech founders. The other core theme for us is commerce enablement. Entrepreneurship for us is one of the best paths to creating wealth. Small businesses employ nearly half of the US workforce, but they face a growing economic pressure, including interest rates, supply chain disruption, and increased labor costs. And they also lack technology and access to capital needed to grow. And so we invest in the startups that invest in the tech that enables these entrepreneurs of small businesses to grow and thrive. And then the third important piece of our investment philosophy is in the care tech space, or the care economy. It's the ecosystem where families, employers, and institutions from daycares to nursing homes, schools, and hospitals come together to support young, old, and sick. This support underpins our economy and is a $650 billion largely untapped market. And currently, a quarter of all US adults are what's part of the sandwich generation. meaning that they're providing care for both their children and parents 65 and older. And the care burden is disproportionately impacting women, as 80% of unpaid caregivers are women who spend 20 to 40 hours a week providing family care. And so we invest in the technology that powers companies, reducing the burden of care so that women and families can reach their financial potential. And so when we think about AI, just a quick description. So AI is the application of math and software code to teach computers how to understand, synthesize, and generate knowledge in ways similar to how people do it. AI is inspired by human intelligence and makes it possible for these computers to think and act like us. It doesn't require these actions to be pre-programmed or act independently. The other space that people talk a lot about is machine learning, and that really refers to the ability of us to extract knowledge from that data and to make predictions and decisions based on it. Machine learning provides those machines with that ability to learn new information and patterns with a developer's guidance. The current and most prevalent use of AI in a lot of our companies and a lot of the tech out there has been in Gen AI. And that's the type of AI that can produce the various types of content we see, including text and imagery, audio, and synthetic data. And when we think about the AI market at a glance, a lot has been made in the AI space, but we're still really in the early innings of maturity of the companies. While funding has accelerated in the last 24 months, most companies are still very young. In Gen AI, most 50% of companies are Series A or earlier. And to show how much growth has accelerated, in 2022, investors invested about $4.5 billion in AI-powered products, while in 2018, that was only about $400 million. So over an 11x increase over those 4 years. And so one of the things we think about is sort of where we are in the cycle to really think about where true value can be understood. Gartner places Gen AI currently at this top of inflated expectations, and it's going to likely slope towards disillusionment in the next 2 to 5 years. But there are other types of AI like causal AI and generative cybersecurity AI, and they're closer to those trigger. So there's a lot more that can happen, and there's a lot more upward mobility. Prior to this boom, fintechs had already found use cases for AI. One study indicated that as of mid-2019, 85% of fintech firms were already embracing and using AI technology in some way. And typically, when there is a technology paradigm shift, adoption is usually gradual. But in this case, both established companies and startup companies are embracing AI for a variety of uses. And incumbents especially tend to move slowly since they have existing investments tied in other areas. But with AI, these incumbents jumped right in and started investing very heavily in spaces, specifically around the Gen AI use cases. So one case, for example, is JP Morgan, and they focused on internal AI development, spending around $100 million developing AI-powered anti-fraud systems for customer payments. And that's already an investment that's brought the bank's annual fraud down by 14% over the last 5 or so years. One of the other things that we think about when looking at AI companies and that we're starting to look into is how to really due diligence a lot of these companies, because so much of it is AI washed. Every company has AI in their deck right now. It's a powerful tool that some companies can certainly leverage, but it's important for us as a fund and for investors to really think about how those AI tools are being used. One of the categories is the integration of that. Is it proprietary? Are they building at the infrastructure layer, or are they using applications of existing AI? One of the big gating factors that slows a lot of companies down from building their own is they don't have those resources, especially at the startup space, to develop their own large language models, and they don't have access to their own proprietary data sets. So building in-house can be really expensive. We also think about, where is that data coming from? There's a lot of synthetic data that AI can create, or do they have proprietary data that they can use? Because that data can actually be a key differentiator. But there's still increasing concerns about data privacy and user opt-in. And so there's a lot of legal and regulatory challenges. A lot of teams don't necessarily have the experience in the space, and they haven't necessarily developed in it. So that's something that we definitely vet for. And then, there's been a lot of talk about human replacement and the worry that AI is reducing job opportunities for employees across customer service and engineering, design, and many other fields. if companies are leveraging AI to reduce a lot of these manual tasks like customer support tickets, write code quickly, generate design ideas, there might be less time for employees that have to spend on these tasks over time. And that opens up a lot of opportunities for them to think more strategically and spend more time focusing on and upskilling on strategic activities. It allows the business to invest in other parts of their organization that require the human intervention side. And so within fintech specifically, AI has really helped to automate a lot of processes, analyze threats, reduce fraud, improve the customer experience, and it can automate the analysis for a more accurate and efficient decision-making process. All these benefits have brought together much better efficiency, higher margins for some companies, and they're continuing to look at enhancements in everything from credit scoring to loan prediction and lending and advanced algorithmic trading. And it's not just startups. There's a lot of larger, again, incumbents. Stripe, which is one of the more established names in the fintech space, has been really a leader in the space, and they've adopted OpenAI's GPT-4 for a wide range of tasks, from helping detect fraud with support forums to a virtual assistant capable of answering questions or troubleshooting issues. You've got Ramp, which actually we use for our own credit cards and expense management, and they're using AI to sift through a lot of expenses. In fact, for them, they just recently published that out of every software vendor paid through the 15,000 companies that use them, the largest growth for those companies has been through AI companies. And so everything from OpenAI to Midjourney and Fireflies are all experiencing 50% more usage than any of the other areas. Ramp itself uses it to automatically categorize expenses, to speed up month-end analyzing, price discrimination, and much more. And so when we think about our strategy at Artemis around AI, we really are thinking about how to best leverage it for sourcing in the spaces that we're already doing the work in, and how it can enhance some of those companies. And so some of the areas of interest for us on the fintech side that we've already been spending time in with our advisors and LPs are compliance and risk management, fraud detection, and loans and underwriting. And so a couple companies listed there that we've looked at on the compliance and risk management side are one is Halo AI, that's automating risk and compliance management for fintechs and financial institutions, and they're leveraging AI to enhance due diligence and onboard and monitor and manage third parties. On the fraud detection side, trust is the cornerstone to any financial security. And so fraud has been a severe problem in the financial services sector. So we see a ton of opportunity in businesses really solving for this, typically costing billions in that space. One company, Blue Binder, is a collaborative banking solution for seniors. And that goes back to a lot of those care themes that we think about. And it makes it easy for families to keep their elderly loved ones' money safe and manage their finances via power of attorney. They're leveraging AI to enable banks and CDFIs to predict and prevent elder financial exploitation. On the underwriting and loan side, everything from origination to servicing, banks, lenders, and borrowers have to deal with a lot of different forms of documentation and data management. And so AI and ML are able to process a lot of this unstructured data and minimize labor spent on a lot of these repetitive processes. We're currently looking at Builder's Patch, which is a financial software for the multi-family housing space, mostly focused on affordable housing. They streamline the entire underwriting process for the developers and the lenders, and they're using AI currently to really help create those memos much quicker, parse information from all of those pieces they're getting. So there's quite a lot of opportunity in a variety of these types of spaces. Within our portfolio, several of our companies are also starting to integrate AI tools for optimization and processes, mostly ChatGPT and Midjourney. One of our commerce companies in Fund 1 has their own machine learning team, and they're working on building out solutions in the digital fashion space. In Fund 2, we've got a couple companies already leveraging the existing tools, but really thinking about how to continue to build on that. Max Retail is a company that unites and strengthens the retail industry, helping small retailers and brands sell excess inventory through a network of online and offline retailers. A lot of that requires a lot of intricate matching technology. And so they're using AI to augment everything from SDR and sales calls and exploring computer vision and AI for SKU matching, which has been a big piece of the distribution for them. Hello Divorce is a legal and fintech platform focused on making the family law process easier, affordable, and more digital. And so they're leveraging AI for data compilation and application completion. They've got a lot of their own proprietary data. And so for them, they're thinking about working with models that they can train their own data on. And so these are just a few of the kind of examples of how companies, both small and large, can really leverage quickly a lot of these AI tools that are coming out. So I'm happy to open it up for any questions or talk more about the Artemis Fund, but I figure I'll keep it brief and do more Q&A if anybody has any.
So we have some questions coming in. The first one is a concrete example. How does AI help in divorce?
Yeah, so for a lot of on the divorce side, a lot of the cost is filing forms, filling in information in the right agencies at the right time, and that's why it's been a very costly endeavor. And so in Hello Divorce's case, they're able to collect that information much quicker, think about how to actually disseminate it into the right places. The side of divorce that Hello Divorce covers is not the complex small 5-10% of divorces that happen, but a lot of it is those who can't afford to actually deal with lawyers and everything else in a much more simple way.
Next question is, what proof points do you look for in startups for seed funding?
For any seed funding. Okay. Yeah. So for us, our version of seed is a company with product and revenue and market. So we do, a slightly later stage. We like to vet our customers. We like to make sure that our founders have experience in the space. They're not necessarily serial entrepreneurs, but most of our founders have been building in the space that they're in for 10, 20 years. And that's a big piece of it for us. We think about the structure of the investment as well, and are we able to get a Series A investment for that company, which is a really big milestone for us.
So the next question is, what does AI do that was not being done before, in respect to a divorce case? What's new here?
So a lot of it is focused on its time. And so again, in this case, we are, able to, not just this company, but others, what AI does in general that has not been done before is take large amounts of data and find ways to parse that into the right place that they need to, without having to do just general search. And so that can be applied to, when you're trying to fill in information in all of your forms in divorce or in the loan applications where, a developer is applying for a loan through several different lenders, having to upload a series of sheets and documents. And then that lender then spends countless hours, 20 to 40 hours on average, parsing through this information as a human before they can make a decision versus integrating some AI tools for this.
So is decentralized public or private finance infrastructure part of your fintech thesis? And if so, where do you see the opportunities for innovation? DeFi.
Yeah, we haven't spent much time, I would say, on that space. We are interested in infrastructure companies. For us, it's really focused on those building within vertical fintech, international payments, remittance. And I would say that's really the areas we see ripe for innovation. There's been a lot of payment solutions more locally in the US, but a lot of remittance wires and that across borders really takes a long time for companies.
Well, a lot of blockchain companies, which were doing that last year, are now looking at AI. Do you think there's a good fit there between the two? One can leverage the other?
Potentially, we don't spend a ton of time in blockchain, so that's one area of fintech that we typically stay away from. And again, we think even with sort of crypto and a couple other things, we always thought about in the Web3 space, companies still building in unique spaces that can be applicable without the addition of these new layers of technology. And so we think about companies that can exist in the world without having to necessarily be a Web3 company or necessarily have to have AI as part of it. I mean, 25% of the decks we're seeing right now have the word AI in them, and that's not necessarily what the company actually is or it's doing. And so you really have to understand how they're leveraging it, and if it's a true AI company, and does it actually need the AI to make it better.
Okay. How much of the need for AI is a function of a bad UI interface from the existing tech stack in each vertical? How quickly will the incumbent platforms fix it and close out the startups aiming to attack the legacy inefficiency?
Yeah, I mean, I think a lot of the, I don't know if AI always fixes the UX and UI problem. I think a lot of it is how do you get data faster, understand it, and parse it. You can definitely build out a better UI and UX system in a lot of these, incumbent platforms, but it's still how can they gather information, deliver it to you in a much more seamless and frictionless way.
Right. We had a presentation a few weeks ago about AI and radiology and how AI was really coming to the fore. And the reason is that there weren't enough radiologists to read all the images. And so they were relying upon AI. Where in the fintech world do you see that happening?
Yeah, I mean, a lot of it. So the one that we're doing the work on now, Builder Patch, is a lot of that is, I spoke with one of the large affordable housing originators at PNC last week, and they don't have enough staff to really parse through the loans, and that's a big issue for the affordable housing space. We're currently having a crisis on affordable houses in terms of Houston itself, I think, is underserved by about 400,000 homes, and there's a lot of these larger cities that need about, in total, I think the US needs to build about 4 million affordable homes. And part of the friction point is how do they get it through the lending process? And it's interesting because even in this space, it's a climate issue, because in order to build in a more climate effective way, a lot of the VCs that are investing along with us or looking into this space are climate VCs, because they're thinking about the only way for us to accelerate a lot of this is through this technology, so that an individual does not have to spend 20 to 40 hours parsing information to create a memo to then present to the team. If that can be done seamlessly, they can focus more on thinking through, is this a good fit? Where does that fit? Parsing through, what does the rest of our portfolio look like?
The question is, how big is the Artemis Fund, and do you consider non-US AI startups?
So our fund 2 is a $50 million fund, and we only invest in the US currently.
Next is, shouldn't AI be better at fraud detection, i.e. pattern recognition?
It should be. I mean, I think, again, it goes back to a lot of, where's the data coming from? A lot of it, there's not a lot of, there's a lot of regulations coming. But a lot of that data is not necessarily true or clean data. And so it's only as good as what's being fed into it and how it's being read.
Could you share a good case of AI being used by one of your health tech care startups?
Outside of Hello Divorce, we've got one company, and they haven't started using AI yet, but it's called NeighborForce. It matches seniors who want to age in place with caregivers for non-medical services. And so really the whole focus is keeping elders who want to age in place out of the medical system. A lot of it is focused on really matching based on personality and fit. And I think that can be used a lot to gather those information for the types of things that elder needs and the neighbors that are helping to facilitate, but they haven't yet integrated that into their matching system. But again, they're collecting their own data points on the elders, what their needs are, and the neighbors across a variety of cities.
Great. And who are the main investors who have participated in the follow-on funding with your portfolio companies from Fund 1?
Yeah, so for us, we have a variety of investors. We don't actually ever think about 1 or 2 follow-on investors. We really try to match up experts in those spaces. And so, for example, if it's a fintech company, we think about insurance venture funds like AmFam, like Franklin Templeton, like Northwest Mutual. If it's a care tech platform, we think about who's the right investor for that space, and the same on the retail side.
Great. And what do you think is the future of regulatory and AI? It seems like fintech is a highly regulated space, and there's quite a bit going on there. You did mention compliance, but can you tell us more where you think it might be used?
Yeah, I mean, we think there's a lot of in the privacy space for sure. There's a lot of there's definitely a lot of regulations that will likely come with AI, because it's where is your data coming from? Did you get the rights to use that data? And so those are just some of the areas that have already been highly regulated, both on the between fintech and the web. But I think that's a big issue within the fintech space in terms of the efficacy of what you're getting.
You've been talking about the early stage impact of AI on fintech. If you had to take the long view, what do you think is going to be the main result of AI coming into the fintech space? What's going to be the ultimate long-term change?
Yeah, I mean, I think overall it's really that broader, more distributed, friction-free environment where a lot of these tools and solutions get to a much broader demographic.
Okay. Next is, which of your AI investments is the best investment short term, and which one considering long term?
So we're not, I would say, AI, specialists. And so again, we think of AI as an added layer of technology and efficiency for our companies, not necessarily AI. So it's probably too early to tell in terms of which of these companies will affect AI as a true. And for us, we really decided to stick to, again, our core themes and then think about AI as an added, piece of technology that they can use versus build, because most of those startups don't necessarily have, I would say, the bandwidth, the resources, and the capital to build their own systems.
In many cases, AI really requires very good training data. What are you seeing here in the fintech space? Is there lots of training data available? Is there a land grab for content, or is there plenty to go around?
I think the large incumbents definitely have a lot of great data that they're able to use, and that's really powerful. And then, on the tool side, the interesting thing that's happened with a lot of the, everything from ChatGPT to OpenAI is they're really keeping it very open in terms of who can use it and what cost. Usually tools end up scaling in price for larger enterprises, but it's been very streamlined in terms of whether you're a large or small corporation and whether you can use these tools to start to build your own models and systems.
With AI in general, we're seeing a lot of vertical SaaS plays where you just narrow the application down to one application or one feature set, and then you can lower your cost of capital there. What are you seeing in that vein in the fintech space so far?
Yeah, that's great. That's a great question. I mean, I think it's going to accelerate a lot of the vertical fintech spaces that already exist. We're definitely spending time in vertical fintech, and we think that, much more the same in commerce, much more specific solutions for that customer set need to exist. We've got one company that, again, isn't yet leveraging AI, but definitely could be in the mobile food space. They've basically built a payments platform, ordering, management, marketing, focused on any kind of mobile businesses, starting with food trucks, displacing everything from Square and Toast. And so, this verticalized solution has worked quite a lot, and they're matching where those food trucks need to be with their partners like Compass for distribution.
Great. We're near the end of our time. Do you have any closing words on your fund you'd like to share before we move to our next presentation?
No, I mean, we're always happy to talk to people who are interested in learning more about the fintech space. And yeah, please feel free to reach out.
Great. Thanks, Diana.
Thank
And
you.
with that, we'll go ahead and move to our next presenter. We have Chris Casper of Techless. Chris, if you can jump on and show your slides. Love to hear more about Techless, and then we'll have questions afterward for that as well.
Good. Hey everyone, great to meet you guys. My name is Chris Casper, and I'm the founder of Techless. We are here to create healthy technology. I started this company about 4 years ago when I had foster kids, and the caseworker dropped them off and said, "Don't let these girls near anything that looks like a smartphone. It sucks away the essence of who they are as people." And that was kind of a catalyst moment where I realized that there's more to it than just kids. This is actually something that's really hurting us culturally as humans. And so we're on a mission. In the next 10 years, we're confident that we can give the world back 100 billion life hours. These are hours that would have been squandered on screen time, and we're giving that time back for people to wonder, live, imagine, do more productive things with their lives than watch cat videos and makeup tutorials. So again, I mentioned this started with kids, but that was kind of the tip of the iceberg that started this journey for me, and realized that right now people are growing in awareness of this tidal wave of exploitation that has largely happened through big tech, and people are starting to push back. Consumers are starting to change behavior. 164 million Americans, this was a Deloitte study last year, they're trying to cut back from their smartphone usage. But the truth is that most of them are not succeeding. When we look back at our kids, it's a lot worse. We've got massive increases in suicide rates. People cannot cut back. We did a survey of around 2,600 parents. All of them were worried about the things popping up on their screens. So if everyone's worried about what's going on, we have to ask ourselves, hey, how come this hasn't been solved? How come Apple and Google haven't snapped their fingers and fixed some of the issues going on here? And the truth is that they built themselves upon the attention economy. It would be illegal, it would be fiduciarily irresponsible for them to change their business model. This is the revenue that they're getting from their app store alone. This is eyeballs on a screen. This is the money that they're getting. And so it has an awesome opportunity for someone to come in and build a company on a different paradigm other than the attention economy. So we asked ourselves, hey, we're making healthy tech. We want to solve this problem. What's the number one challenge to us living this out? And it happened to be our phones, the things in our pockets. So we went out and spent 2 years in R&D, built our first gen product called Wise Phone. It's a pure and simple phone, digital minimalism. It calls, text, a few basic tools, no social media on it, no app store, nothing you can get addicted to, very, very basic. We've been selling this for about 18 months now, and we've learned a lot since starting, but it's been just a really strong product that's resonated with customers. It's more than just a phone though. If you really take a closer look under the hood, that's actually what we're proud of. Talking about AI capabilities, we have a really strong platform that we own. It's 8 independent apps that we built from the ground up, a back-end portal where you can see every call, message, location history. We own that. It's de-Googled, de-Applified. We own the platform, and that's something that we can use that information to actually serve our clients or serve our customers instead of exploiting that information for our own benefit. So here's kind of basic screenshots of it in action here, but it's fully functioning. I have one in hand. I use it on a daily basis. So we hit this critical point where we recognized Wise Phone was kind of step 1, and we asked, what is step 2? So I had a ex-Google product manager. You'll hear about his name a little bit later. And I hired him and said, hey, we really want to nail this next generation product. What is our next gen product? And so he went and interviewed around 50 of our customers. You have 30 here, but we've done more since then, and just got qualitative and quantitative information. And the trends were very obvious. People bought it because they liked how simple it was. They were actually paying a premium for the boundaries on the device, kind of like a personal trainer. You're paying for something that's hard, but it's actually healthier for you. So that's why they bought it. But what I'm most excited about is when they actually used the phone, it was absolutely transformative in their life. Everybody universally felt more present, more focused, less anxiety. They felt feelings of freedom, and those life hours giving back to them was actually manifesting in the way that we wanted it to do. So call it a very successful product. Categorically, we are in the minimalist phone category. If you look at the top right one, our biggest one would be considered Light Phone, our biggest competitor, and we are definitely a better device to use for people that have used both of them. We have kind of risen to the top as best in class in the minimalist phone category. And so we're proud of that, but we have our sights set on something bigger. Review-wise, we have a 99.97% customer satisfaction rate. That's unheard of in the industry. Most people get a failing score here, and we are just killing it. The reviews keep coming in, and if you read these, it's story after story of people's lives being changed, which we get excited about. From a brand perspective, our brand is just knock it out of the park. We have a net promoter score. This is a score that goes from -100 to +100. In our opinion, this is the greatest predictor of future success of a company. So you can artificially inflate sales for a couple months, but you cannot win the war with net promoter score without something of substance. We've got a 61 out of 100, which is amazing. This is better than Chick-fil-A, Google, Target, on par with Apple, super strong brand, super sticky customer base. If you put on your Silicon Valley lenses, we've been super capital efficient. Typically, companies of our size will spend $2 million, $3 million, and they will maybe have a product that they bring to market. We've already sold thousands of them. We've brought in revenue. We have a clear path to profitability. We have quite a bit of traction for the amount of capital we've raised so far. And so I mentioned, hey, here's kind of the future. We are in the middle right now of launching Wise Phone 2. We just soft launched pre-orders. So we're taking pre-orders right now. We sold out of Wise Phone 1, always a good problem to have. And the cool thing is we're 4xing our profitability from device to device. A lot of details into Wise Phone 2, but high level, I think the most important thing to think is Wise Phone 1 was a minimalist device to serve digital minimalists. Wise Phone 2 is a healthy device to serve people that want to live a healthy life. It's much more robust, much more capable, much broader total addressable market. So speaking of total addressable market, we found this niche within homeschool and private school students. We're not about 30% of our sales are to kids, but within that niche, it's a near instant conversion. I speak at conventions like this regularly. And so with 5%, we're looking at $100 million opportunity. So there's definitely points to be made on the scoreboard here. And then when we hit the healthy target market, back to the 164 million Americans that are wanting to cut back from their smartphone, but can't quite figure out how, that's the bigger market that we're going after very soon with Wise Phone 2. High level, we're selling around 300 a month. Once we hit 1,000 a month, we hit profitability. So not far off from that. And then just a quick landscape, view of the landscape competitively. We've got other minimalist phones. Again, we've emerged as the best device to use categorically. People think they can lock down smartphones, but they're starting to realize that the incentives aren't there. Apple released an article 2 weeks ago that said, hey, screen time controls and parental controls, they're buggy, they're not working as well. They actually just publicly admitted that this isn't a priority for them. There's a couple kids phones that have popped up. One of the cool things about our company is it is safe for kids, but it is an adult device, which means kids get to keep their dignity. So if you give a kid the choice between a kid's phone or a Wise phone, they'll pick the Wise phone because they prefer a more sophisticated looking device in a brand. So we have leg up there. Not many people actually want privacy hacker phones. They're over $1,000. People, believe it or not, don't care about privacy as much as you would think. And then the cool thing is there's a whole pile of Gen Zers buying flip phones right now. And we think that's awesome because we are so much better than a flip phone. And there's a lot of opportunity there. So the two key leaders, I'm the founder. John is our chief product officer, chief tech officer. Both of us have done $1 billion in sales for our previous companies. I had an ad agency prior to this. I launched a precious metals company, a consumer facing company. I have a lot of direct to consumer experience. And within 6 years, we crossed $1 billion in revenue. And I was the lead for marketing on that. And John launched a product at Google with a very small team. We're talking 3 people deep. And also year 1 brought in $1 billion. And he's really good at laser focusing on what we really need to do to drive results and financial results for the company. So we've got a power team here at the top. And high level, just some validation. You can look at these logos. You'll probably recognize a handful of them. A few months ago, Gizmodo picked up our phone. They thought it was really cool. So you can find it on that. And then that's it, kind of high level on our fundraising. We currently have a round that we are closing. We were trying to shoot for raising another $1.2 million. We have a little bit of time left in that round, basically 30 days. So if you're interested in, if you think you can do due diligence, we've got everything available rapidly, then we have a little bit of room left in the round, but we actually have a draft term sheet for our next round, and it's multi-million dollars. So we're closing this round because we honestly don't need the cash as much as we thought we would need it, which is always good news for a company when you're fundraising. So happy to answer any questions, and please do reach out if you're interested in being the tail end of this round in the next 30 days. So.
Great, thanks, Chris. Diana, looking forward to your question. And the first one from the chat box is, where are you marketing the Wise phone? And what's the price point?
Yeah, so Wise Phone 1 sold for $400. Wise Phone 2 we're selling for $300, and we're pulling in a subscription component, which is actually pretty cool. So we're charging $7 a month, and then we're also offering carrier services. So unlimited texting, calling, the Wise Phone Techless subscription, all for $30 a month is kind of our new package. Currently, we're selling on techless.com. We have one carrier that is distributing for us. And once Wise Phone 2 launches, it will be distribution worthy, meaning we could go to the Walmart buyer, or we have a couple other carriers that have expressed some interest. And so we could open those doors there and go there.
And what's the price point?
So $300 is Wise Phone 2.
Great. And what's the exit proposal here?
Yeah, exit strategy. We actually had an unsolicited acquisition request just a month ago, which is awesome. But we are making a really strong brand that is ethos built, and believe that a carrier would be interested in acquisition, or also potentially anyone. There are certain political groups that like platform level control. And so we could see either one of those groups. We are not political. Our organization isn't, but the platform that we've built, kind of think Twitter with Musk, he bought that for the political power associated with it. Because we own the infrastructure, there's a lot of value there. So either one of those routes.
Great. And which segment, age, gender, is the hardest to penetrate for Techless?
I would say the senior market is currently a little tricky because they're not in the worlds that we're in. And also we're selling to Luddites and people that aren't on social media. So we have to be a little bit more creative with our marketing, but not an issue. That's kind of what I did, was creative marketing prior to this. But definitely lots of opportunity in the senior market, but we just haven't tapped into it hardly at all yet. So
the next question is, how do you think about distribution over the next 18 to 24 months and at scale? Does anyone on the team have experience or connections selling through some of those channels?
Yeah. So again, we intentionally are making WisePhone 2 distribution worthy. WisePhone 1 had too many technical challenges, flashing phones, some things like that. This thing is coming out of the box, ready to go, very straightforward. This has been a hurdle that we've solved for already. I personally have relationships with the Walmart electronics buyer, with a couple of cell phone carriers. We've had a few of them reach out to us. So we probably have about 6 to 7 warm leads already of people that are interested categorically, but don't necessarily have strong experience in the distribution network other than the things I've done in previous companies. So
a suggestion is get an article in the AARP magazine for the older people. Have you thought about trying to target that segment, or are you looking for other easier markets to go after?
That's a great idea. I love it. Thank you for the suggestion. We actually in Q also want to run an ad in a Plain Person magazine, think Amish Mennonite crowds, because they're also a very untapped market. And so philosophically, we're thinking print already. So that's good.
So website says Wise 2 available winter 2023. When will it be ready?
We are shipping guaranteed before Christmas. We've already sold a lot of pre-orders. In fact, our revenue has kind of stayed level, which is you would expect when you do a pre-order, it would dip down because there's some risk associated with it. But yeah, shipping before Christmas. That's our big, huge deadline for our dev team with the new product release. So possibly sooner, realistically, end of November.
Great. My last question is, what is the exact use of funds? What specifically are you going to be using the money for?
Yeah, I actually have a slide for that. So here's high level what it is. I think the most interesting thing to look at is the advertising bit. We've partnered with a group called Rain Factory. They are, if you follow Kickstarter, they have done over half of the multi-million-dollar campaigns ever launched on Kickstarter. They've done more than 50. They have branched beyond crowdfunding campaigns and now are doing self-launch campaigns. And so they've agreed, and we're going to basically hand our ad budget primarily to them. So a heavy push with them. Give them $300K and it's almost a guaranteed 5x return on ad spend. And they've done this and it's somewhat formulaic. So definitely latching on to the experts there in our industry for product launches. So,
okay. We will slip in one more question. You mentioned hardware-based competitors, but would an operating system also be able to compete with techies?
It could. When we first launched, we actually launched as an OS only. Very quickly, we realized that although it was simple, the idea of putting an OS on a phone was very intimidating to most of our target market. So my wife, who hates our printer, could install the OS, but it just sounded too hackery. And so we just, as a service to our customers, put it on a phone and sold it, and it removed a lot of barriers. So great question.
Great. Well, with that, thanks so much, Chris, for your presentation. Guys in the audience, thanks. Great questions as well. With that, now I'm going to pass it back to Shane. So Shane, what's the next step here?
Thank you, everybody, for joining us. It was a great session. Thank you, Diana. Thank you, Chris, for your presentations. We'll be following up with everybody via email, so be on the lookout for that, and we'll see you next time. Thanks again.